Of course, we have seen Samsung really beating the highest analyst estimate, but that was also due to one-off gain related to displays. Not to mention that this GTV chart on the Bloomberg right now showing how we have seen the memory chip price recovery that we saw earlier in the year start to soften a little bit. So what does this spell for other chip makers in the region as well?
Right. As you said, the numbers are coming in better than expected, actually quite sizably better. If you look at the operating profits coming in at 22.7% year-on-year growth, 8.1 trillion won of operating profits. The consensus estimations were at around 6.5, so clearly much better than expected. But as you said, in terms of the chip prices rising, clearly it's kind of softening a little bit. I think it's related to the COVID-19 effect, and it might last much longer in terms of the actual economic recovery. It might take longer than expected. Yes, it is putting some pressure on that. But nevertheless, if you look at any sectors that are showing any kind of improvement in terms of the prices or even sales, would be semiconductor-related, the equipment side as well as the DRAM side as well. So yes, the concern is there, but nevertheless, if you look at Samsung Electronics valuations, clearly it is one of the cheapest stock relative to any other chip makers globally. So therefore, we think that Samsung Electronics can be reasonably attractive investment company at this point in time. As for the other companies related to the chips, yes, in terms of the earnings-wise, we think that it is quite attractive still. I look at all the U.S. Chip makers as well as the Taiwanese and various other companies that we look at, including the semiconductor, the equipment side. The attractiveness is very high relative on the valuations. So I don't think that there is too concern about this at this point in time.
And Daniel, what about when you look at it regionally? How do you feel about markets like Taiwan or the Shenzhen exchange that are very heavily veered towards tech firms, but at the same time, you're seeing their 14-day relative strength index really in overbought territory?
Sure. Yes, but I still continue to focus on the growth-related sectors. COVID-19 is actually affecting the industries. The growth rate of the untech businesses are rising rapidly, and obviously that results into strong demand for semiconductor side as well as any type of manufacturing-based countries. If we look at the countries that looks attractive on evaluations and residual income model that I run, we look at Taiwan, Vietnam, China, Shenzhen, and Korea, including KOSPI. So these countries, the emerging market countries, that shows a very strong manufacturing base, particularly relates to the growth segment or fourth industrial revolution segment. These countries look very attractive on a relative basis. But as for the emerging market that has heavy dependency on raw materials, they don't look good in terms of the valuation.